You have been picking bullish or bearish before the candle even closes. You have been deciding before the evidence arrives. And every time you lost money on a candle that looked perfect, that was the reason. Not the market. You. A green candle is not bullish. A red candle is not bearish. Those are just colors. What's inside them is a war. Today, you learn how to read who is winning that war before you bet everything on the wrong side. After this video, you will never see a candle as simply bullish or bearish again. You will see it as evidence, physical evidence of what buyers and sellers did under pressure. The body size, the wick length, the close position. Each one is a witness that was there. Each one tells you exactly what happened. The market has been leaving you confessions for years. You just didn't know how to read them. You were taught green candle equals bulls won. Red candle equals bears won. Simple. Logical. Wrong. A green candle can be the most bearish signal on the chart. A red candle can be loading the next rally. The color tells you the direction of the close. It tells you almost nothing about the conviction, the momentum, or what comes next. You have been reading the headline. Today, you learn to read the story underneath it. A large candle body means one side dominated from open to close. There was no real fight. One force crushed the other. A small candle body means both sides showed up. Buyers pushed, sellers pushed back. Someone barely won. You have been treating both the same. A tiny green body and a massive green body are not the same signal. They are different stories. Large body size is not decoration. It is the volume of conviction behind every move. Large body, certainty. Small body, argument. A long upper wick means price climbed high, then got violently sold back down before the candle closed. Someone bought near the high. Someone else sold everything they had into that enthusiasm. The wick is the receipt. You were probably the buyer near the top of that wick. You saw the move, felt the fear of missing it, and entered. A long upper wick is not a failed attempt at higher prices. It is a successful trap. The candle closed lower for a reason. A long lower wick means price dropped hard, then was bought back up aggressively before the candle closed. Someone sold in panic near the low. Someone else was waiting with buy orders sitting below the market. They needed you to panic. They needed you to sell everything at the wick's low. That gave them their position. A long lower wick on a bearish candle does not confirm the drop. It often signals the bottom of the drop. That distinction is everything. Where a candle closes within its own range is the single most important piece of information it contains. A bullish candle closing at the very top of its range, buyers were still in control when the bell rang. Strength confirmed. A bullish candle closing in the middle of its range, buyers took the lead, but sellers fought back. Conviction incomplete. A bullish candle closing in the lower half of its range is not a bullish candle. It is a candle wearing a green costume. When a candle has almost no wicks, just a long, clean body from one extreme to the other, something unusual happened. It means from the first second to the last second, one side was entirely in control. No hesitation, no pushback. That kind of dominance does not come from retail traders reacting to news. That is an order that was placed with intention. A full-body candle is not momentum. It is a decision. And decisions made with that kind of certainty tend to continue. A large bullish candle on low volume is one of the most dangerous signals a chart can produce. Almost no one participated. The move happened in thin air. Any real selling pressure can erase it in minutes. You saw the big green candle and felt certainty. The certainty was an illusion built from an almost empty room. Size without volume is a rumor dressed as a conviction, and you acted on the rumor. A large green candle that closes in the bottom half of its range is the market's most sophisticated trap. It opened bullish, It rallied. It felt like confirmation. Then the sellers arrived and dragged the close back down. The close tells you the bears won the second half of the session. The open tells you the bulls started confident. That tension is the signal. You looked at the color and saw bullish. You should have looked at the close position and seen a warning. A large red candle that closes in the upper half of its range is one of the most under-read bullish signals on any chart. It opened bearish, it dropped, everyone sold, panicked, confirmed their fear, and then buyers absorbed it all. The close recovered. The bears started strong and finished weak. The bulls absorbed everything thrown at them. You sold into that candle. Someone bought everything you sold. That someone understood the close position. You didn't.
A candle with a tiny body makes you look away. Nothing happened. No direction. Move on. But a tiny body at a major support level after a sustained downtrend with high volume underneath it, that is not nothing. That is a fight that ended in a draw. The bears attacked. The bulls held every inch. Nobody moved the close significantly. That is defense. Small bodies at key levels are not irrelevant. They are the moment before the decision. The next candle is the decision. The shadow ratio is the relationship between wick length and total candle range. It tells you exactly how much of the session was rejected. A candle where wicks consumes 70% of the total range, the market rejected almost everything it tried. Both sides failed. A candle where the body consumes 70% of the total range, one side dominated the session without meaningful resistance. Start measuring. Not feeling, not guessing, measuring. The ratio removes your emotion from the read. A bearish engulfing candle swallows the entire previous green candle's body. Every gain is erased and exceeded. The body size of the engulfing candle is the signal. A slightly larger body means weak conviction. A massively larger body means institutional selling. The bigger the engulfing body relative to the previous candle, the more certain the reversal. The market isn't turning, it's slamming into reverse. When you see a bearish engulfing, do not ask if it is bearish. Ask how bearish. The body size is your answer. A bullish engulfing candle swallows the entire previous red candle's body. Every loss is reclaimed and exceeded. This is not just a reversal signal. This is the moment when someone with extraordinary resources decided the drop was over. They did not whisper. They did not test the water. They placed a body so large it consumed the entire previous session's fear. The message is not subtle. The message is, the price you sold at was wrong. I will prove it by buying everything you sold and then some. Here is the mistake you have made every single time a reliable candle pattern failed you. A bullish engulfing candle at the base of a 3-month downtrend in oversold territory is a reversal signal. The same candle at the top of a rally is a dead cat trying to bounce. The body size, the wick ratio, the close position, none of it means anything without knowing where on the chart the candle appears. Context is not an additional consideration. Context is the sentence. The candle is just one word in it. Stop reading single words. In a genuine bullish trend, each green candle closes near its high. Each pullback candle is small. The wicks are short and controlled. That visual rhythm, consistent large bodies, small retracements, closes near the top, is not a coincidence. That is organized buying. When you see a large bullish candle followed by a candle twice its size with wicks everywhere, the trend is not accelerating. It is being contested. Real momentum looks clean. Contested momentum looks chaotic. The body sizes tell you which one you are inside. Every body size you have ever read was incomplete. You were seeing one dimension of a two-dimensional signal. A large bearish body on declining volume is a candle with a loud voice and an empty room behind it. The conviction isn't confirmed.
A small bullish body on massive volume is the opposite. Barely any price movement, but enormous participation. Someone was absorbing, not moving. Body size tells you what happened to price. Volume tells you how many people agreed. You need both, or you have half the story. Every candle body you study on a 5-minute chart exists inside one candle body on a daily chart. Your entire signal is one pixel in someone else's trade. Institutions decide their positions on weekly and monthly candles. A large bearish body on your 5-minute chart is a single wick on their time frame. This is not discouraging. This is the most useful thing you will hear. If you align your read with the higher time frame body, you trade with the force instead of against it. Find the dominant body on the daily or weekly chart first. Then and only then does your lower time frame body have context. Start at the top, work down. While you were reading bodies on a 5-minute chart, someone was building a daily body you cannot see yet. It has been forming for 6 hours. At hour 3, it looks bearish. At hour 5, it looks bullish. At the close, it closes near the high with a long lower wick and a large green body. Every signal you read during those 6 hours was the inside of this one candle. Every panic, every rally, every reversal, all of it is now one body on the daily chart. The candle you are inside of right now is being written by someone who already knows how they want it to close. Read the daily body first. It is the intention. There is a specific candle formation used to trigger your entry at the wrong time. A large bullish body, closing high, on decent volume. Perfect signal. Except the large bullish body was the exit of the institutional position, built to look like a continuation, so you would buy what they were selling. The tell is in what comes after. A genuinely bullish body produces follow-through. A manufactured bullish body is immediately met with a gap down or a series of long upper wicks. The candle that was designed to fool you looked exactly right. The evidence arrives in the next 2 to 3 candles. Never close a trade on one body alone. Every framework in this video is a probability built on patterns. No candle body is a guarantee. No wick ratio is a law. The one rule that protects you from all of it: never act on a candle that has not closed. The body is not set until the session ends. You have entered a trade because a forming candle looked like a perfect bullish body. Then the last 30 seconds of the session turned it bearish. A forming body is a story being written. A closed body is a story that was told. Only the closed story is evidence. Only evidence justifies a position.
When a candle closes, ask these 4 questions in order. 1. What is the body size relative to recent candles? 2. Where did the candle close within its own range? 3. What is the wick ratio? Where did the market reject and how violently? 4. What is the volume behind this body? If the body is large, closing is near the extreme, wicks are short, and volume is elevated, that signal has all 4 factors aligned. High probability. If any factor conflicts, small body, close in the middle, long opposing wick, low volume, the signal is incomplete. Wait. The next candle is already answering your question. There is one candle body I have not discussed. It is the most important one on your chart right now. It is the trade you are about to enter, driven by what you just felt watching price move, not by what you just learned reading it. Every large bearish body we studied was drawn by someone who believed they were right. Every bullish trap was entered by someone who was absolutely certain. The market is made of those decisions. You are about to add one. Make sure the body you are about to draw is evidence, not emotion. You came here reading green as bullish and red as bearish. You are leaving reading body size, wick ratios, close positions, and volume as a unified language. The market hasn't changed. The candles haven't changed. Your eyes have changed. And in this market, that is the entire game. Go back to any chart you misread. Look at the bodies. Look at the wicks.
Look at where each candle closed within its range. You will see it now. That is the distance between the trader who survives and the one who doesn't. Not more data, more perception. You now have it.